everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, July the 11th, 2012. Well, a continuation of the trend to the downside today in a candle with a lower high and a lower low. Previous day's trading we had a large black bodied candle that took out the previous high but also took out the previous low, didn't change the trend to the upside, and we saw strong price rejection from the 123.28 level. Today we saw the market test the previous support level here at this swing low at 122.87, and we saw the market rejected from that level. We did also see the market rejected from down around the 122 level, and we have a very small black bodied candle at the end of this very strong downtrend that the market has been in, and it's a spinning top type candle that does set the market up for a potential change of trend to the upside. We have had the market, however, close down below the midpoint level, so the sellers have still taken control of this market, but they did lose some commitment around this 122 level. So the low of this current candle will be very important for tomorrow's trading. So a fairly indecisive candle, but strong resistance at 122.87. Now, in terms of the Fibonacci extension, and we're examining the relationship of the current first time frame downtrend to the previous first time frame downtrend, and the market traded through the 100% level in a bearish way, and we can see how this market is approaching the 161.8% level, and it's all very indecisive trading now with this spinning top type candle. The size of the bodies of the candles, even though we have a white candle and a largish black body, are certainly much smaller than this series of candles that we saw here. So we are seeing some hesitation from the sellers at the moment, and does set this market up for a potential change of trend. But looking at the Fibonacci retracement of the prior uptrend, and we now have an expansion of that uptrend, and the market is interacting with the 161.8% level at 122.30, and today here with this current candle that's finished trading, we saw the market test below that level and be rejected from there. The previous day's trading, we saw the market test exactly to that level, and we saw some slight rejection from there. So moving forward tomorrow, that level is very, very important. If we see the market take out the 122.30 level in a bearish way, then our next target is down around the 119.44 at the 261.8%. But we are seeing hesitation around this level, and that again does set the market up for a potential change of trend to the upside. In terms of Ichimoku, quite a bearish market in all three time frames, as we've noted earlier, and here we have the market trading below the cloud, so we're bearish in the long term time frame. We're trading below the Kijun-sen and Tenkan-sen, so we're bearish in the medium term and fast term time frames, and the Chikou span here is supporting the negativity that we're seeing in all three time frames by trading below the corresponding price action. So we have a bearish market in all three time frames, but the bears are no longer supporting this trend to the downside. The trend is down in that first time frame, however, but we have a small spinning top type candle, an indecisive candle, and there is potential for a change of trend, but strong resistance at 122.87 and then at the 123.28 level, but no support until the market trades down to 121.55. If we do see a bearish breakout down below there, we could quickly end up trading down to 118.76 or to the Fibonacci levels from the retracement and the expansions.